FXBros.
Yo, 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 yo. We are back for June. It's the last month of the second quarter, y'all. But it's not too late. Not too late to get to this bag. Last Sunday we was in Houston. Again, congratulations. Shout out to Sanaya, cousin. She just graduated high school. I'm about to go to Southern University, Herman. Medical law. So we all about to get the bag around here. But as far as the markets go, right now I currently got the 4-hour charts up. Seems to me, and I'm gonna draw it out, we are pretty much kind of in consolidation right now. Let's see. Consolidation right there. I'm just trying to make shit pretty. You hear me? So overall, as far as the 4-hour goes, we are definitely looking for a breakout. One thing I can note, we did have a structural bearish pattern being created here early in this consolidation. This is pretty much around May 23rd on Thursday. So then ending off that week right here. So we ended the week off. Then prior to that, we had a retest past that first initial structural point up to the high of the consolidation, and followed by a sell-off to fill that clean traffic. Now, even though it's not as clean as this bearish structure with this engulfing, but we do have somewhat of a bullish structure, and it's weird that the bearish structure from the 23rd and this bullish structure coming from Thursday on the 30th, which is crazy. They both Thursdays. But as you can see, this structure was kind of built around the same price. One thing I do notice, the bearish structure looks a lot cleaner, and it's also following our setup with the engulfing, the color change engulfing. As you can see with these arrows, giving you the indication to take sales or take buys according. And the fact that we're at this point, let me see what we got. We roughly got like 3 hours left for this 4 hour to close. But the fact that we are already starting to show real signs of a sell-off, and this candle here at Friday, 9 o'clock in the morning, so that ended off that week pretty much last week with a rejection, and pretty much started Sunday off with this last little bullish push, possibly trying to reach these highs, but we followed by a rejection. And so far within this first initial hour, we have already started selling off, and I'm pretty sure this move would be more defined on the 1 hour. So it'll be nice if we drop down to the 1 hour and we see a bearish engulfing somewhere in that time. And it looks like we might be getting one, depending on how we already broke the low, previous low on the 1 hour. Hopefully we could test these targets down here, these lows down here, maybe completely fill in this gap that was created on Friday, pretty much around the close of Friday. But yeah, this sign will be a very good indication on potential sales. Yes, I wouldn't be mad at the market reaching up to these old highs from Friday of what was that, London and New York, that crossover, that high. I wouldn't be mad at the market try to reach above there, try to sweep those highs before we get a real sell-off. Other than that, and that also would create more of a picture for clean traffic to be filled. If it doesn't now, cool. We got targets down here that we can reach for. And that's about, let's say we close here, let's say 37. Go down here, let's say 27. So that's an easy 30 pips. Nice situation for a trade. As far as the highs, from about 57, we got 77. That's 20 pips away. We shall know more as time continues and we get more candlesticks to print. But nothing has changed as far as structure for the bears. We were looking for a break above, potentially above these highs, and then maybe testing these highs to reach up into this old zone from January 8th. And then we had another zone, depending on how bullish we are, from January 2nd, at the beginning of the year. That's a weekly range right here, and a 4 hour range we're looking at. And as you can see, we haven't touched that price since really the 5th and the 9th. So I think that was Friday. Yeah, the 5th Friday and the 9th on Tuesday in January. And we are now in June, approaching the end of the second quarter. So who knows this last month to finish out the second quarter could get us into these areas for a deeper selling. Yeah, we would definitely need to stay in these zones if we're going to look for sales. If we go any higher, then it's probably going to be more of a higher potential that we can reach this 4-hour gap from February 14th of 2023. If I go to the 4-hour time frame, you'll see right here, February 14th, 2023, no prices touched that area. And from sweeping this low, this was the ultimate low of the 2024. That was February 13th. By sweeping this low here in April, mid-April, that was enough liquidity for the market to then trade higher than the high that created this low. So we look at what created this low. Not only was this high, but it's also in conjunction with these highs here. So for the price to come above this high, attack these highs, we needed to go deep down for a discount, preferably underneath a some type of strong support, and that was found around this price, and ultimately the low of 64.43. Like I said, we played well below 64 cents, all the way down to 63.60, pretty much. The lowest we got on that. So as long as we don't continue with this bullish structure that took out the highs, and right now the bullish structure has not been broken yet, so as long as we continue with that, we should see continuation for bulls potentially this week and possibly this month to end out the second quarter, and then we can tap into these zones right here. If we break bearish out of this range, being that this resistance up here was strong enough and we needed, you know, a strong bullish market that came from grabbing a lot of liquidity down here to push it that high. If that was all the market was trying to do, then we should start to see selling off. And the first step would be, one, looking for a 1 hour engulfing on the bears. That would be the first step. We could get into some tester entries just to test the waters of the market. And then once that's followed by a bearish continuation or a bearish engulfing on the 4 hour, then we know we can go in heavy. And that all could be had near these highs. Like, you don't have to wait for the market to break out, retest, and then get into sales. That's cool. That's even more further confirmation that you waited for the market to sell off all the way down here to see if it was even going to break this low. But I like to be in as early as possible. And if I'm looking for sales, I want to see how high can I get into a sale? You know, how high into the market can I catch a sale? And most of the time, that's the most uncomfortable trade, because when you're thinking about that, you already within, most likely, you probably already within bullish structure. So your mind, like every human mind would normally think, is that the market is going to continue bullish. And it could, and it probably will. But if this doesn't happen, meaning if we don't create continuance of a bullish structure on both time frames, meaning 4 hour and 1 hour, then that will kind of lead us into the ability to take more of kind of like a risk-free trade from selling at that high. And it's not ultimately risk-free, but that's the closest to risk-free you're gonna get when you're selling near a crucial high on a higher time frame. placing your stops above the previous highs, and then you have a boatload of range to sell into, meaning that your loss is going to be way, way less than the potential gain that you have. And it was followed by the fact that the market didn't continue higher. We didn't take out that strong resistance up here that we had. We had 2 points of it from 21st, 22nd, and around the 28th. These two levels of selling, and right now the market is near that area. So the fact that we rejected this strong, it's okay for the market to reach up into these highs. That's cool, because on a 1 hour, it looked like it had the potential to. That's not gonna scare me out. What's gonna make me think otherwise than taking that sell at this high is if we get a big body, to close above this resistance. Like, you need a strong volume, big body candle to break through strong resistance or strong support. Same thing in this strong support area here. When it gets to this, if it's going to continue down, it's going to be a big body candle with a lot of force. Some of you see this, structural support. And then you have, it's not the biggest, but when you look at a big body, predominantly it's smaller wicks on either end of the candle, or if you're going in a certain direction, the close of that candle should have a small wick. The open, can do a little small retracement and then continue in the direction that looking for the candle to go into. But overall, you need a strong body, full body to close below. And yeah, as you can see, this candle not only closed below this structural support, but it ultimately closed below the lowest wick in that support. So stuff like that. You got resistance here, candle struggle, then you get a big body candle to break through it. And that low was not tested. This high was not tested. That's just some of the key things you want to see and you want to take note of. Let's see. A little bit, we'll pull up the news. But on the cool, let's see, if I look at the 1 hour, did we really miss? Let's see. I'll go to the 1 hour. Trying to see what we from last week. So what we missed, starting from Friday, Wednesday, Tuesday, Monday, Sunday. Bam. So basically, this candle here, this little small indecision candle was Sunday. Yeah, support here on a 1 hour with these wicks. Big body breakthrough this whole structure, even the lows of these wicks. Then we continue higher. If you were looking at the market as that type of situation and also tapping into this gap for a continuance higher, that would have been your first kind of indication that, okay, possibly going high. But the fact that this next candle closed above it, you can easily just put your stops below and maybe test this high up in this area right here. That was the next scenario before, because who knows if we're going to get to the tip top, but at least you want to catch something that's the low hanging fruit, the easy. So this level, and then right up in this kind of like an armpit, we want to get right up under it. So right here at that level, that's where we want to take our targets, because nobody knows if we're going to go this high. So like I said, we want to get that easy target. So after that, Monday night, you probably would have been getting out of that trade. And then looking for another scenario, bam. Not only that, you get this bearish engulfing at 9 a.m. after sweeping highs, especially this area sweeping highs up this first sign of, the market potentially want to sell off, even though it was held at this resistance. So we have strong resistance. Bam, big body candle. Break below all this structural resistance plus this lowest wick right here. This bearish engulfing or this one was enough to get you into the trade. Primarily, this would have been ideal. Stops above here. Like I said, look for that little armpit. Right above it, want to get that easy trade. We don't know if the market is going to go all the way down here and continue, so we're not going to go for TP down here. We want to put it right in this little cusp. And as you can see, the market sold off until Wednesday night, going into Thursday. We did sweep this low, but we did continue. I know me and Jay was talking about this over the weekend, I think Friday and Saturday. That the market did sweep this low, but we did need a continuance of sales. And this is like those trades that it's not an ideal setup with the bearish, bullish color change engulfing, but I like to look at if-then situations. If this happened, then this should happen. If this didn't happen, then this should happen. And this scenario was if this didn't happen, and the thing that didn't happen was the continuation of sales. Especially after we get this big bearish candle from this minor consolidation range right here, kind of faking people out. It's like a breakout right here, then it pop back in, maybe then a continuation for selling off, but we didn't break through this range. And even though from here, from that point, after this market, you already had enough to draw consolidation. And if we truly are in consolidation, you already know exactly what we about to target. The next level of highs up here. So with the fact that it didn't get continuation, you could have easily got into buys after it broke the high of this candle. Or after you saw the structure of this, you would go down to the 1 hour time frame and see if when that is about to break this high, this 4 hour and get in. So you would kind of have a tighter entry. Stops below here. And then you would target either 1, this area for this structure, or 2, right up in here, right up in the armpit. Like I said, we don't know if the market is going to go to these highs. So we want to get that low hanging fruit, that easy trade. And bam, you would have got that easy money. Same scenario here. I don't know why the market didn't print this as a bearish engulfing, because it did have 2 green candles, but I know this was like super indecision. I'm pretty sure certain brokers probably listed that candle right there at Friday, 9 a.m. That candle was probably printed on different brokers. So nonetheless, like I said, you could have got into trades here, stops above here. And right now, you probably would have been sitting in a nice little break-even scenario before you would have got out of this. And one thing that would have been eerie to me, I like to look at like the Fibonacci ranges and stuff. And the market sometimes likes to hesitate at that little equilibrium level of 50% on the Fibonacci. So if you would pull up, that, and it works best on large range candles, meaning like a full body, big extension type of volume candle, and you could set that high and low and get the 50% range. And just kind of monitor that and see how the candles act around that area. And typically, just like in this area, had 50% right here, hesitated, body, then we had a pop up. The fact that we didn't continue bearish, targeting these lows, and we had this doji indecision, as soon as the market would have with volume, trade above this, you could have got into buys. Like I said, it's not, and the only reason why I'm saying is because you following structure. Yeah, structure here. And we know this is a low of consolidation. This is a high consolidation. So until we break, you go trade this consolidation pattern as a high and low. Get to the high, sell off. Get to the lows, buy up. Simple as that. You don't change your mind frame until you get a breakout, a retest, and then a continuation. That's when you start to look at, you know, the continuation of the move versus just ping ponging that hole from side to side. Really sad thing. Scully in it. What's up, brother?
Yo, what's happening, man?
Man, you already know, man. Living the dream.
Glad to be back. I know we missed last Sunday, but always good to be back, man.
Yes, sir. So, right now, two things my eye is on with this consolidation. I'm looking to see if we get this bearish engulfing on a 1 hour to start with testers and how that reacts. Will that continue with a sell-off? Like, is this the high that we were going to reach on Friday? And if not, how low will it go to potentially keep up with the structure? Because it can go as low as 66.40 and then turn around, and it will still keep up with this bullish structure. Because we, like I said, we had a high here, we got a high here, and this is a high, but it's in line with the bearishness of this, even though we're in consolidation, but it's still close enough to where the market can reverse and try to, you know, reach a little higher. So you want to be kind of wary about that. But like I said, if you locked in and you're engulfing setups are there, take it. You know, you could back test all day and you'll see like there's multiple scenarios that work out in your favor if you just let the engulfing play out. You know, because it's an engulfing candle for a reason. That bitch is overtaking whatever the previous candle and possibly previous multiple candles did in one candle. So that's power. If you see that, don't go against that. Don't trade against that. You 9 times out of 10 probably gonna lose every time for the most part. So
it's a fact.
Nah, facts. It's a fact. No lie. So as of now, like I said, we just really monitoring this hour. Of course, we got like 2.5 hours on the full hour as far as what I got. Yep, 2.5 hours right here for this to close. Yeah. And that's pretty much what's going to set us up for the beginning of this week. But prior to all that, before we really look into all that, let's talk about what's going to move the market. And that's that fire news. Fire news. Sunday, we just recently had news at 6 o'clock. Australian dollar. Let's see, did that show up in the charts? Yeah.
Just had news.
Yeah, at like, what was that? Is that 6? 1800? Yeah, that's 6.
Okay.
At 6 o'clock, right when the market opened, like pretty much the hour after.
All right.
Yeah. So we had that come out. Judo Bank Manufacturing. Slight increase, nothing too crazy. Monday, S&P, Global Manufacturing, and ISM Manufacturing. That's going to be 8:45, 9 a.m. Then following that, we got a 8:30 p.m. retail sales month over month for Australian dollar. We're looking for that to increase. Previous negative 0.4. The consensus of 0.1. Tuesday, JOLTS, job openings, Judo Bank Services. We got JOLTS for the morning, 9 o'clock, and then PM 6 and 8:30 again is Judo Bank Services PMI for Australian dollar. And then GDP growth rate for Q1. See how they did first quarter. Right now, they're not expecting nothing to happen. 0.2, consensus is 0.2. As for Australia. Wednesday, ADP employment change, S&P Global Services, ISM service, that's for USD. That's 8:45 at 9 a.m. So we're gonna have a lot of volume with these news events just pop coming right after each other. And following that at 8:30 p.m., we got a balance of trade for Australian dollars. So far, hefty week. Thursday, continuous jobless claims, initial jobless claims for week average. Every Thursday we have this news event, 7:30 in the morning, right before NYSE open. Then Friday, the ultimate non-farm payroll. And that's it. I thought we would have like CPI, but I guess it's probably gonna be next week. So we got a hefty week, man. We got a hefty week. I would say for sure if you catch, sales, all buys, whatever the case you catch, just play it light with the continuation of the week because it's gonna get shaky Thursday and Friday. So I would just overall play it light. Let the NFP guide us in what they want. Where we going.
Yeah, man. It's the first week of this month. So, kind of let that play out.
Last month of the second quarter.
And that too.
Mm-hmm.
Wow. Yeah, I didn't think about that.
Mm-hmm.
Last month of the second quarter.
Whereas only I'm gonna say the broke rich are traveling.
Facts.
The ultra rich, they kicking back and trying to add to these assets because they good, but the broke rich are traveling. So
yeah, they about to expand their portfolios. I mean, most of them are doing it already.
Facts. Big facts. Same type of time we on too, man.
Come on.
Expansion and growth.
That's it. That's it, man. Just gonna be patient for these moves. Wait for something to happen. Like I said, like you talked about earlier with this 1 hour in golf, and that could be a nice situation to test out this week to wait. Let's see what the larger time frames, the daily.
Yeah, let's see.
Going into Tuesday just to see what it can give me.
The daily. I drew the little consolidation box with the daily. One thing I'll be noticing too, especially when you find consolidation on the smaller time frames and you draw it out and then you go to the higher time frame, kind of looking how it's playing out within that. And even though we had all these wicks and those wicks kind of consist of actual candlesticks on the 1 hour. But if you look at the structure it's creating, even though it's still in this consolidated range near the highs, it's kind of creating like bearish structure somewhere. And then you look at the closes right here according to the wicks from this structure. And then look at the bottom. You see how close these bodies are to this low? Sometimes I just be having a mental note of that, like maybe we're more like as far as like a magnet, maybe we're more prone to really trade off and sell off. But on the flip side, it's like looking at this move here. If we really probably were going to sell off, we would have broke this low already, potentially, unless if they was waiting for June to do that. Other than that, it's kind of up in the air right now. The 1 hour as it closes, roughly in the next 20 minutes, is going to be the first sign. It's going to tell us you know, how strong the bulls are versus the bears. So
Yeah, that's why, like I said, it's good to see the direction for the daily, but like you can see right there, it's like nothing's really gonna, really happen until it breaks out of that, that area.
Yep.
And that's just on the daily. So I see it as if like if that was the 15 or the 30-minute or whatever, lower time frame that you would enter off of, would you enter, right now for sales?
If we get a 1 hour engulfing, I will put in the tester trade like how you suggested.
True. True. And then waiting for the next
The 4 hour. Yeah.
exactly. Yeah.
Yep.
Which means if you go to the 4 hour, where we are right now, Zoom. Yeah. Okay. So we right there right now. So let's say boom, we get a
We got
1 hour engulfing. Right now, it will give me 1 hour engulfing. If it closes right now in the 1 hour, even though it may give us a, engulfing, the 4 hour will still have 2 hours for it to, for it to form.
that.
Now, can it happen? Yes. What I don't like is that it is inside of like like it's not really broken out because of that long bearish candle right there, and then the bullish one that's right next to it on the left, really. Um, yeah, just looking at that, it's like it's within consolidation. So even if it does give me a bearish engulfing at 12 o'clock in the morning, it won't be like where would your target would be.
Well, your initial target would be testing these lows, all these wicks right here.
Exactly. And then your stops will have to be above,
Above
not
this high, or if you want to be even more safe, you go above this high. Which is still probably like a 1 to 1.5 or close to it.
right. And the chances for it to come against you, it is what it is. But um, yeah, this one I would be like, I would have want to caught it at the bottom when I look to the left and the traffic is a little bit cleaner. You know,
Gotcha.
um,
Down here, catching bias.
yeah, like if that wasn't, I mean, pretty wasn't.
And the fact that you broke all that down, that tells me potentially that this move here, this push up, and then followed by a quick rejection, basically eating all of what it did. This could be like a fake out scenario. We could be continuing high to test these.
Yeah, that makes more sense when looking at structure. I mean, look what it just did too on that bullish move. You look to the left, the last bearish engulfing that we got on the 4 hour, that one has now been taken out. Yes.
Yeah.
So we flipping now.
Right.
Can you get like what I see can probably happen is get like a closure, like almost like a pin bar type situation, or it can close within this area on the 4 hour, and you can get a sandwich that can just run it up now.
And that would be a bullish trade in the morning.
Yes, and that's possible, but yeah, we have to see what will happen. Me, I am more bullish in this area that we are doing until I get um that 4 hour engulfer that kind of looks a little more worth it. Honestly, now that it kind of flipped back, I could see any type of. I'm looking for another bullish engulfing more so than a bearish engulfing on the 4 hour. That's where I'm at.
I got you. So even if you do get the bullish engulfing and the sell off, you would you hesitate that sell potentially just to see how the market reacts around here, and then maybe
yes,
you get more rejection around here and get a buy, then that would be your ideal buy to come up here.
Yes, I would like that more so than running because the buys will be, I think, greater because you entering on the 4 hour, but you're looking at targets on the daily, the weekly. I think that's a little more greater instead of trying to play with these sales and it's
But
really,
the same. Let me see.
yeah, it's
Like
just,
if you got, even if you entered in a tester on this engulfing, the first initial sign that this bearish move, even on the 4 hour, is probably going to continue to work. Is if before we get to these are all the wicks rejections on the 4 hour right here, but this is structure right here. So if we break below this low, that might give you more of an indication that the the bears may be in control for the 4 hour to extend below here potentially.
I would like to see a close on the 1 hour.
Below here,
Yep, you got it.
yeah, that's structure. This is
Yep.
support.
That's structure, and then that's the
Support.
bearish engulfing. That bearish engulfing already been like taken out. So that when it does that, those are like big signs. Like,
Yeah,
man, what type of engulfing was that? Get out of here.
yeah.
And then I'm a
Look,
sandwich.
it was engulfing a weak candle too.
Exactly. So and then I'm gonna come back and sandwich you, and then we go keep on going. That's
Yeah,
why I said this engulfing right here. I don't feel it that much.
I got
You
you.
know,
I got
but all in all, it still is going to be a tester. That's why you go with it a tester, and then have your stops above those highs, and they get ran, they get ran. But
you. Yeah, I got you.
overall, just waiting for these candles to print. Like I said, this is a Sunday, so we just kind of overlooking and kind of seeing what we can see. And I mean, last week we had it to be bullish, and it wasn't. Well, it wasn't bearish. What do we? I think we were looking at bullish.
I mean, and from here, this is Sunday from last week, right around here. So the market is definitely bullish from all this move. It's bullish engulfing and then creating structure, breaking these highs. So we were definitely bullish. And then once we sold off, even though we had multiple bearish engulfings to get in for sales. One thing I do notice, the buys were cleaner.
Yes.
Like we didn't get too much of, you know, big retests um, as far as buys. With sales, sales had the potential to trick you out of a position if you.
Yeah, the sales was the only retest.
Yeah, yeah. After it broke this structure, it retested here and it continued. And this buy was simply just a rejection of consolidation. It was no true engulfing. Like I said, even though we did sweep this liquidity out here and we did continue, but overall, this is just chalked up to it wasn't continuing lower. It was continuing to stay in this consolidation range. So that was the reason for this buy. Like I said, you didn't really get really any bullish engulfing. I mean, you got this one, but it still was profitable because no stops were hit below this low. So only thing, that was late, and it you would have had to been up and to catch this move. And like I said, it was profitable, but it was iffy. It was within a tight range. This would have been a range you would have to look at on a 5 minute right here before it broke out. But yeah, man, it is a tricky area. Like I said, it's a lot. There's a lot going on. It's a new month. It's a new week. There's NFP coming out this week. There's a lot going on. So you gotta also keep that in consideration and be prepared to let the dust settle before you get too hasty and try to pick a direction because we don't know. It's the beginning of the summer, the beginning of a whole new month. So
Yeah, this could easily be a lot of movement, and
yeah,
I will miss a bunch of it because it won't be one of my setups. It'll just be news and news induced and all that stuff. So there'll be a lot of action, but it won't make sense to you. It's like especially technical.
yeah,
You know, you stand back, you're gonna have to look far back and look at the daily or the weekly. Wait the whole week and just see what this candle look like.
right.
So yeah, just like Six said, take it easy.
Yeah. Man. Look at it like this. You got 4 weeks in a month. This is the first week of the month. With all this heavy news, wouldn't it make more sense to, kind of be a little bit more hesitant this week to just see what the market's going to do, just to get all the eager retail traders out the water? Because that first week, everybody trying to make back what they lost for the
Facts.
previous month. And if it ain't looking too good, they'll most likely probably be out of the market, you know, beginning or middle of the second week. And that's when the activity is all happening. That's when motherfuckers be like, oh, damn, now the market want to move.
Hmm.
Yeah.
I mean, it's not an easy thing, but at the end of the day, this
It's fun though.
it is. Yeah, you have to find. That's what I'm saying. You got to kind of find the fun or the challenge, enjoy that, because if not, it'll mess you up.
Every time.
Yeah,
No, damn near for the most part. You do have control over it, but damn near no every chess game or every blackjack game, anything like that, it's like a something you got to figure out, like a puzzle per se. Like no two games are played the same. Like it's gonna be different
facts.
moves. It's gonna be different. It's gonna be different emotions. So and people play that. People, you can go to New York, they play that at the park like it's nothing. It's all about what you enjoy to do. It's a mind trick type of you know, heavy analysis, scientific, mathematical equation. Then you gotta add in human intuition into it. Like, yeah, it's fun. Speaking of that, let's look at the daily. Let's see how that is according to the DXY. So we did have this consolidation pretty much. That we had a nice
I
sell.
still had my markup from last week. It's like the 66.90 area. I'm still waiting for buys. A close above there on the daily, 66.90, and then things are going to be looking really good for buys.
Yeah,
Was it
man,
66.90? Oh,
this daily engulfing is still in play for these targets. I got a weekly range above here and a 4 hour above that. Yeah, all from January this year. So, and that's another thing I've been noticing when I draw these gaps, especially larger time frame gaps. I'm starting to see like the potential of time that it takes, especially on like a daily, a weekly, or something, and even a 4 hour, that it takes for the market to turn around and reach back up into that gap to fill it. As you can see, we are approaching June. It's month 6, and we still haven't tapped into January's prices or their gaps. So it's just certain things I'm starting to just have that mental note of, and eventually I'm gonna write shit down. But that's why I put the dates here instead of just putting a weekly gap, 4-hour gap. Like I put the date to let me know like this is a gap from that time. And we way in June and we just not starting to reach up into this price. Because we came up here for a reason. That's a big thing.
Right. And you delete those only when they've been like broken and stuff.
When they've been broken and traded through.
Okay.
Like this one has been broken per se, but it didn't have a breakthrough, retest, and continuation. When it does that, I take it off.
Ah,
Like
gotcha.
this one, you know. This one broke through a shitload, but it didn't trade through. So this is still in play. And if I would have took it off, I wouldn't have saw this potential opportunity. This potential opportunity, even with this line, just the fact that it's price is tapping into this range. If I'd have took this off, it wouldn't have just been blatantly obvious to me. You know, I still probably could have seen the fact that okay, we coming to a low, but we're not continuing lower. So if we starting to reject this, I'm gonna find the lowest structure point around here to test, which will be these highs. And as soon as we break above, that's my buy.
Right.
Put a buy here, stops below here, or however you want to put your stops. And as long as the market don't continue lower with bearish structure, you good. And really, if you're looking at the daily and you waiting for price to close above this structure area here, and you would have got into this, you could have dropped down to the 4-hour to 1 hour. And long as you don't see, you know, real strong structure on the 1 hour, 4 hour creating down here, yeah, you good. And as you can see, if you would have held that buy, yeah, it would have been a real good buy to hold. You know, but yeah. That's when I take them off. So right now, as of now, these are like the predominant, you know, points.
Yeah, man. TradingView fire.
No, fair. That's why I love it, dog. And on some real shit, all this could be done on Oanda. You just got to go to the other charts, the TradingView charts.
That's a fact.
You heard me? So you really don't even need TradingView on the cool. Like we get the shit for free.
Right.
If you really want to be real.
That's true.
So, and come to think about it, probably next month, being that it's going to be the start of a new quarter, I might transition to that. I might get off of TradingView and just trade the pro charts on Oanda and just keep it all Oanda. Fuck it.
Okay.
Yep, because I'm since I think last month or a month and a half ago, like I'm completely done with offshore brokers.
Oh yeah.
Yeah, dog. Like I got burnt once. The last time I got burnt on that hull, I was like, yeah, I'm done. I see how the leverage can affect you. It could make you profitable, but those markets, they are so over highly leveraged to where they have to close your trades for you. Like if you notice in Oanda, it takes a lot for your trade to actually have to close via margin call. Like
Oh yeah. Like you'll literally have to like take yourself out.
you could be negative 50 pips in the market, you know, because it's 50 to 1. Now
Yep.
you go to that 500 to 1 and you negative, like after that new day opens and the new trade day opens, if you don't have enough in your equity, they'll just close that trade. And not only do they close that trade, all your other trades get adjusted to your new account size now. So you could have had this many units in initially, but once you go, you know, margin call or something, yeah, they go close that trade to fulfill your equity, so your equity can come back positive, and your other trades will be minimized too. So
Well,
you'll be up
that's a good thing. That's like saving you.
yeah, you'll be up $200, and then if you still holding that trade because it's, you know, it went negative against you, you'll go back to that motherfucker be $33. You'll be like, what the fuck? Where $170 went? Yeah,
Wow.
once I saw that shit, I was like, yeah, done, bro.
Wow.
I'm,
Yeah.
I'm giving these niggas money. Like I'm a good trader, but I have everybody had their faults and shit, but you can't create a career off of them. That's a big fact.
Damn. Yeah, they sure is pushing it, boy.
No, they're pushing it because, like I said, bro, and it's proof.
You can run it up.
Like I dug deep into that YouTube shit when niggas was going at all them gurus and be like, oh, these niggas frauds. I was digging deep. Like those fucking offshore brokers, like they be paying them niggas to market. Because think about it, if I pay you $10,000 a month, 5,000, whatever the case, whatever I fucking pay you, if I pay you a month and you get so many people to sign up, I'm winning because of course they retail traders, so they go ultimately lose if they go stick around their first year or two. So I'm guaranteed money to at least the first year or two,
right?
Including with the commissions and shit that I get. You feel me?
Yeah.
It's a money grab, because they know overall we're not doing that many payouts to niggas that's profitable to where it's gonna hurt our personal P&L per se.
Thanks.
So we could give you all these incentives, add $100, we'll give you free $200. We could do all this dumb shit. Give contests, nigga, entice your ass through emails with new commodities to trade. Like I was getting emails every day, boy. That's when I know they was getting desperate. Boy. They was like, you can trade wheat now. Now you can trade coal. Now you can trade pork bellies. Like it was crazy shit. Niggas that nobody worried about trading, but I was like, yeah, them niggas get desperate, boy.
I ain't even know it's like that. Yeah, I definitely want to build on that just to see. I didn't know you was really getting it in on that offshore.
Yeah, because I was looking at it like, okay, if I see, because I done turned, bro, I done turned $100 into $250 in like a day or two. Like the same trade I would take in Oanda, the same trade, but just the fact that you got that 50 to that 5 to 1 once that trade starts to go into profit, it grows exponentially faster because now your P&L growing, everything is getting larger and larger. So it's I don't know, it's hard to explain how that the leverage and shit works because it's the same amount of money you would place on a trade in both platforms, but that leverage just has you. It gives you more profit power because 50 to 1 versus 500 to 1. That same $50 trade on both brokers. One would be a $5,000 trade, 50 to 1, and the other one would be like 50,000.
Right.
So yeah, that type shit.
That's a fact. Yeah, man, that's what's up, dog. What you getting into?
Shit, I'm actually just gonna take a little break probably until 11. Yeah, till like 11, and I'm about to get back outside.
For sure. Well, yeah, man. I'm about to say hit me up because I definitely want to see what was up with that offshore stuff because I know that was kind of like the wave. It's kind of like that with almost the prop stuff, but doing it and running it up.
The thing was just I was gonna use that to run it up and then go
exactly
into Oanda, done with the offshore shit.
That's what I thought that was the plan would be, but yeah, that makes sense.
Yeah, man, we're gonna monitor this and we'll put our updates in the telegrams too. We see we did get this 1 hour engulfing, so I'm gonna throw in a little test of sale and I'm gonna go with that move.
See what that one looks like. Yeah, man. Play all the way to the 4 hour shows or something. And confluence, and then we'll be good. But if not, just wait till the next signal on the 1 hour.
Yeah.
That's that.
All right, brother.
All right, man.
Yeah, peace out.
Y'all be good. We'll be back next week.
Yes, sir.
Peace.